How we doing, everyone? Good evening. Good evening. Today is Thursday, May the 20th, 2021. Just coming to you tonight with our real estate note talk. We usually do these on Thursday nights, 7:30. We're also on Mondays at 7:30. We usually talk about either self-directed IRAs or notes. Usually Mondays we do notes, and then today we usually do self-directed IRAs. We did have a discussion on Tuesday night in regards to a self-directed IRA specialist, Scott Ritchie, with Next Generation Trust Company. So I figured we come back today and talk, about notes. So that's what we're going to do. We're going to talk about notes versus rental properties. Some of the pros and cons and differences between a rental property and notes. If you are somebody that invests in rental property, you may want to see what the differences are and think about maybe converting some of your rental properties over to notes. And if you are thinking about investing, maybe you may want to try notes before you try rental properties. So we'll just kind of talk about some of the pros and cons of each of those. Again, we won't be on here too long. We're usually, right around 20 to 30 minutes. If you do watch the replay, you have any questions, please post them in the comment section and we will get those answered for you. Excuse me. So yeah, tonight is going to be about rental properties versus notes. So with rental properties, you usually get a monthly income when you own the property, and you get appreciation. Obviously you get some tax write-offs and different things like that, but we won't get into that specifically. That is, for a tax professional to kind of go through with you. But really, people who invest in multifamilies or rental type properties are looking for monthly income as well as the appreciation of the property. You hold it for a while. If you do have a loan on it, hopefully the loan goes down, the value goes up, you have equity, and you can sell it, at a particular time and capitalize on the appreciation. And then obviously, with the loan on the property, you pay out $1,000. You hope that your tenant pays you $1,500 or whatever the case may be, and you collect that difference. But some of the cons of rental property is the ownership liabilities. If anything happens on that property, they're going to come after you as the rental property owner. Obviously, with your insurance claim or something like that, they're going to come after you if something happens on the property while, the person has use of the property. Now, I know people, know about renter's insurance, and I'm not sure what the percentages are, but, hopefully most people do have rental insurance. But do you really know what's covered in that? Do you have your tenants give you a copy of their tenant policy and renter's policy to see, what is covered and won't be covered? So if they have guests over and things of that nature, something happens, ultimately as a property owner, you are going to be responsible. You have those liabilities. And then also, like I said, the responsibilities of, keeping up the property or paying someone to come by, a landscaper, in the winter or the spring and summer to cut the grass, shovel the snow, things of that. You're still responsible for the actual upkeep of the property. So, ownership liabilities and responsibilities are still there as a rental property owner. Also, we talked a little bit about the legal aspect and suing. If something does happen, you could get sued as the landlord. Whether, it was your fault, maybe you did everything right, but something happened on the particular property, you can get sued. And then also another legal issue is eviction. A lot of times, because of tenants know that they're just renting the property and what they have invested in the property, a lot of times the tenant will just stop paying rent. And then you have to go through the whole process of eviction and everything like that. So you do have to think about these issues, as a rental property owner, the potential of having to sue or get sued and do some type of eviction process. And you could also, again, be sued for negligence. I mean, you own a property 10 years, maybe there's something going on with the property because you're not always sending people by and going by each and every month, or, you may send somebody once a year and then, there's wear and tear on the property, and then next thing you know, somebody trips and falls or something like that, then, obviously you have an issue on your hand as a tenant, as the property owner. So, these are some of the negative things about it. Having to deal with tenants. You're still responsible for those repairs. If there's a leak in the roof, if there's a broken window, if there's toilet issues. Now, in the lease, obviously you can get a tenant to, cover a certain portion of the repairs, but are they actually going to fix the entire problem? A lot of times, usually there's a certain amount, like up to $500 or $250 it'll be responsible for the tenant, for the landlord, and anything over that would be on the tenant. But you ultimately want to make sure that things are taken care of on your property. So you may have to, obviously front that money and then trying to get it back from a tenant, for a couple $100 or $1,000 or something like that they may be responsible for. Will you really get that money? A lot of times you probably won't. So, dealing with tenants, the phone calls, this happened, that happened, I couldn't do this, this is broke, come by and fix this, fix that. You run the risk of having those issues when you do have tenants. Not to say that every tenant is bad, obviously. Most tenants are good, but still, even the good ones will call you and tell you, want you to fix something, want you to change something, especially a tenant that's been paying every month. They do expect you to come by and, take care of certain things when they do happen. So, that's another, issue that you have, or, that you have to consider with a rental property. Also, the monthly expenses. I mean, you have taxes, you have water, you have insurance, you have to take money out for vacancy. What if one of the units, or if you have a single family, what if somebody moves out? You need to save for vacancy. So, it may be a month before you find somebody. It may be 2 months. You have another thing called capital expenditures that you want to put aside in case you do have to repair something. Maybe year 1 and year 2, you don't have to repair something, but you want to make sure that you have that money put aside in case you do have to fix something, in case something does break, something unexpected. So you have a lot of these expenses that come out of that 100% of rent that you that's coming to you. So out of that example earlier, $1,500 rent that I mentioned, you might have to cut that to about 60%, maybe 55%. So really, your actual take home from that property may only be $750, $800 maybe out of that $1,500 once you take out all of the expenses. And for, is it worth having to do all of these things and be responsible for the property for making, $500, $300, $600 a month? For some people it is, but for some people it's not. So, you're not getting all of that money that's coming in each month, because again, you have to put things to the side, and you have to pay certain things out of your pocket. So what is your cash flow really? When you look at it at the end of the year, what did you make? Maybe extra $5,000, $6,000. Is it really worth it having to deal with with all of these other things is the question. And you look at that based on the money that you put out, what type of return are you getting at the end of each year based on the money that you put out. And these are all things that you have to consider, when you're talking about rental property. As opposed to a note owner. Now, a note owner, you still get monthly income as a positive, but you do not get appreciation. But what you can do a lot of times when you're a note owner or you are you're doing seller financing to create terms for a buyer, you can actually sell the property a lot of times for more than what it's actually worth. So you're actually building in some appreciation, usually right from the start. Now, obviously, if you have a year where it goes up tremendously, appreciation, and it may the actual appreciation may outpace what you put into selling the home for, but a lot of times it's not. A lot of times appreciation is just little by little each year, but from the beginning you can put in 10%, 12%, 15% appreciation on it, because again, this person, you are creating terms for them that they can't go to a bank and get a loan to pay for a house. So you're creating all this for them, so they usually pay a premium for properties. And again, as long as they can afford that monthly payment, they're really not, that's what they're concerned most with, is that, do I have enough to make this monthly payment? Does it include my taxes and insurance? And does that go with my budget? Everything else, they don't really think about. So you can actually build in appreciation. So, and then the homeowner, if the appreciation outpaces what you already put in there, let's just say you sold the home at $120,000 and it was worth maybe $100 when that person bought it, and then maybe 2 or 3 years down the line, now it's worth $150. That difference is actually the homeowner. So it's good for them, because then if they sell the property and pay you off as the person who created the note, they'll be able to keep that money. But that's a good thing, because that gives that person more of an incentive to stay on the property as well, as opposed to a tenant. A tenant's not building up equity in a property. They gave you $2,000, $2,500 as a security, $3,000 security deposit, but they're not getting anything for that. They just are able to use the property from month to month. But if they decide to leave, they don't get a check, so to speak, like a homeowner when you create a note or when you buy a note. So those are some of the advantages that you do have as a note holder. So you don't have any of the ownership liabilities and responsibilities. You as a homeowner, whoever is a homeowner out there, you don't call Bank of America, Wells Fargo, or your lending institution, whoever gave you the loan for the house, when your toilet breaks, when you have a problem with the furnace. You scratch up your floor, you mess up, put a hole in the window, put a hole in the wall, I should say. You don't call them up, you deal with it. You deal with it yourself. And this works the same way when you're the note owner, or you have created, terms on a property and offer seller financing to someone. It is up to that particular person who's in the property to fix it. So if somebody slips and falls, they're not gonna call you. They're gonna call their insurance company, and they're gonna take care of it. So you don't have those same liabilities and responsibilities that you do as a landlord, that you would as a note holder. And then two, back to appreciation. Sometimes appreciation doesn't happen. Sometimes from year to year, 2 years, 3 years, it may go up less than 1%. It may not go up at all. You have times back in 2008, 2009 where it went down. It lost. A lot of people lost their equity, had negative equity on their property. There's no guarantee that appreciation is definitely going to be there. We hope that year after year that it has happened for the homeowner, but there's no guarantee. you have no legal issues. I mean, the only thing that you would have is if they don't pay, that you have to go, you obviously have to foreclose and probably take the property back. But a lot of times you don't have to go through the same legal issues that you would with a tenant, that you would with a homeowner. A homeowner, a lot of times, they understand their situation. They know that, they ran into some problems, and they may be more willing to work with you, so you can get the property back and just, let them go about their business, because they are homeowners. They're not thinking like tenants. Now, there are some people that will just drag it out. Don't get me wrong. They'll stay in the house as long as they can until they're made to get out. But most people that are homeowners think a little bit differently. And if they know that they can't afford it, they'll probably work something out with you where you don't have to go to court and do all these things. Maybe you can help them move to another situation, just, so it helps them. And they'll allow you to do that. So a lot of times, you don't have to go through this whole legal situation that you will with a tenant. Not to saying that it doesn't happen, but, a lot more times can you work something out with the homeowner, especially an example, like I said, if they know that they have equity in the property, they're most likely, are going to sell it or do something so they can, get from under the property. So you have less of a legal issue when you're a note holder. You have no more tenants. Now you don't have a tenant anymore. This person owns the property. They are the owner of the property, or they are a tenant buyer with certain rights to the property. And, they're not thinking like just a regular tenant. And that makes a big difference on how people approach where they live. Tenants a lot of times don't keep up the property like a homeowner would. No, I'm not here to bash tenants or anything like that. There are a lot of good tenants out there, but just on a whole, a lot of times, percentage wise, more people that own homes are probably going to upkeep and keep their properties in better condition than someone, living in an apartment, so to speak. Also, you have very little expenses with a note. You really don't have any expenses. The only expense that you probably have is with the servicing company, who's going to collect your payment for you and make sure that it goes into your account. And a lot of times you can get that done for less than $50. And you don't have to, there's no paying anybody to cut the grass. There's nobody that you're paying to do the shoveling, snow removal. You don't pay any water. You don't pay any taxes or anything like that. That's none of your responsibility. So now, if you look at the cash flow, a lot of times you can get just as much cash flow, if not more cash flow on the note side, because you don't have the expenses. You're just receiving the money. The only other expense that you might have is if you have to go to court and foreclose on someone. That might be one of the only expenses until you take the property back, because you don't have to, if the property is damaged, you don't have to fix it up until you get the property back. And then you can kind of worry about those things at that time. And then depending on the situation, you may not have to have to fix up the property at that particular point based on what's going on in the market and based on what you want to do. Maybe you could just sell it as is because you've collected so many payments over the time and you know what it's worth. And even you selling at a discount, you come out on top and it's not worth you putting money into the property. So you really don't have the expenses. And like I said, that cash flow a lot of times, would you rather have $800 cash flow and not have to deal with anything, any headaches, any calls, any tenants and toilets and all that other stuff? Or would you rather have that same $800 as a note holder and, have the $800 and have to deal with tenants, toilets, and all that other stuff, or have $800 or $750, or even, let's just say it was $700 cash flow, but you don't have to deal with all that other stuff? Is that $100 difference or $50 difference, is that worth that? For some people it may be. For a lot of people, I think it would be. So, those are kind of some of the basic, pros and cons of rental property versus notes. So, based on this information, if you'd like to know more about note investing, we are looking to talk to people who may want to get involved in this and have some more questions, you can reach out to us. Our telephone number is 973-475-8488. Or you can email me, acg@abundantcapitalgroup.com. You can also, we have a website, www.abundantcapitalgroup.com, if you want to go there. You can visit there as well, but the best way is probably either text me or call me, or shoot me an email if you'd like to know more about this. And like I said, if you have rental property, you've had it for a while, you've had some issues with tenants, maybe landlording is kind of not your thing anymore, or you like to kind of get away from being a landlord, creating a note on a property can be, a great way to do that, where you still have an ownership interest in the property, and you receive cash flow, but you don't have to deal with, the headaches of being a landlord and all the things that we talked about. So if you own a property, a single family property with a small mortgage on it, no mortgage at all, maybe you want to create a note on that to get yourself some passive income. You could do it that way as well. And like I said, it's just basically what they call mailbox money. So, if any of those scenarios fit you and you'd like to talk further, please reach out to us. We'd love to talk to you about your situation and see, what would be best, and how we can structure something to get you what it is that you're looking for and would be best for you. So, with that, we've been on just about 20 minutes. Like I said, I don't try to go too long, just try to make these, somewhat short so, people can watch them when they have time. Again, please reach out to us. If you have any questions, just put them in the comments. We usually here, like I said, on Thursdays. We usually talk about self-directed IRAs on Thursdays, but I wanted to kind of go down this path here because we did have an event on Tuesday where we talked about self-directed IRAs. So Mondays is usually more focused on notes. Monday evening, 7:30. We'll come back with another topic about notes on Monday, and then, next week this time we'll be talking about self-directed IRAs on Thursday of next week. We'll find something to talk about there. If there is something that you'd like to know about the IRA and self-directed IRAs, if you could put that in the comments, we'll definitely try to cover that. And you go to the YouTube channel, Abundant Capital Group. There's a bunch of videos there in regards to self-directed IRAs that I've done in the past, and some other videos talking about notes as well. There's a whole presentation about it that goes into it. So there's some good information on there. So with that being said, everybody have a good night and have a safe weekend, and we'll be back on Monday. Have a good night.